I have really bad news to deliver. So I think an investor that I quite respect sold out of his entire Chinese position. Yes, I think you clicked into this video very well knowing who we are talking about. It is not an official declaration by Mohnish himself, but I think you can kind of infer from the way he describes his current interests in specific Chinese investments. So I will play a short clip from a long interview Mohnish did with Harvard.
Question around your thoughts or your evolving thoughts on investing in China and companies in China. Obviously, when we spoke last year as a class, you had some glowing thoughts on Tencent and Alibaba, and you've made investments there in the past. And I think earlier you made a note of how things have changed over the past couple of weeks. Obviously not. It's been an evolving change. So I just wanted to get your perspective on investing in China and how that's evolved over time.
Yeah, I think probably for me, China would always be difficult. I think in the past, like one time I invested in Mao, which was a stock Lilu told me about. Alibaba and Tencent, very well-run companies, great governance and all of that. But we've got the unknown of the government and all their policies and all of that. And maybe they can transcend and maybe they cannot. I don't know. So I think given the leadership in China and given how they think about things, I would just not put a lot of energy behind China at this time. I still like Tencent a lot as a business. I think Pony Ma is a once-in-a-generation manager, and he may find a way to transcend all the headwinds and curveballs they keep throwing at.
So I think it is rather self-explanatory from the one-year-long ordeal. Mohnish probably has finally understood the true colours of the Chinese government. Jokes aside, I think he still sounded relatively bullish on Tencent as a business and Pony Ma as a person commanding that ship. But that said, he's basically showing no confidence in the environment Chinese companies are currently operating in. So he has completely ignored about talking about Alibaba as well. But I guess we can also draw similar conclusions. So regardless of how well the companies has executed thus far, or how cheap the valuations of these Chinese companies might be, I guess he has made the call that no price is worth paying for the quote-unquote Chinese risk, which is why he decided to stay away from China altogether. You know what you should stay close to? The like button, of course. So remember to help destroy that like button. So for those of you who are unaware, there is a limited time bonus in lieu of celebrating Momo's 10th year anniversary. So if you open an account and deposit any amount on Momo, you can get an extra $10 on top of the other welcome rewards, which will be worth up to 220 Singapore dollars if you deposit minimally 2,700. Now, Momo is also providing users with a 5-day investment learning camp for a grand total of $0. Yes, you have heard it right. It's completely free. So from November 14th until the end of this year, you can enroll yourself into the course and join the Telegram group for free. So you have access to live lectures, courses, and even practice sessions and tutorials to aid you in your investing journey thus far. So all you have to do is click on the link below, register, submit your information, and you can join the 5-day investment learning camp for free. So for those of you who haven't signed up for Momo yet, don't let the welcome rewards worth up to $220 go so easily. Oh, and don't forget, there is still an additional $10 during this period. I'll leave the link in the description box down below. So for my US and also Australian viewers, Momo is also running aggressive reward campaigns, giving out free stocks as well. Just make sure to click on the correct link below. So once again, thank you Momo for sponsoring this video. Now, Mohnish was subsequently quizzed on topics on investing in emerging markets, like Turkey for example. So I think Mohnish has a fond interest in expanding his circle of competence in the Turkey market, so he can basically see sparkles in his eyes when he's describing his experience there thus far. So I'll play the short clip.
Just one quick follow-up on that. Are there any lessons outside of China and how you think about geopolitical risks? Obviously, you have investments. You mentioned Turkey. Obviously, you have investments in India. Is it really just in the context of China, or are there other things, other areas that you've evolved your thinking on?
I think I should put all my energy behind a place like Turkey. I think I should spend a lot more time. The investors that I would be buying stock from in Turkey. So the Turkish stock market is mostly held either by insiders or foreigners. 80% is held that way, and that doesn't trade. The other 20%, which is held by the locals, etc., turns over every 9 days. And for most locals, 9 days is too much. They want to invest at 10 and be done at 2, 4-hour holding period. And Buffett says that stock market is a mechanism to transfer wealth from the active to the inactive. And couldn't be, and these gamblers, they're not investors, speculators or gamblers, sold me Resas at 2.5% of liquidation value because they couldn't be bothered what the companies were. That's not part of the equation at all. When you're buying at 10 o'clock and selling at 2 o'clock, you are not running any intrinsic value calculations. You're just trying to have some kind of psychology that somebody will pay you something more than what you paid or whatever. And so I think that because of the nature of the investors and also that the geopolitical and all of that everyone's exited, I still think like 95% or 97% of Turkey is not investable. But there's the 3 to 5% where their revenues are in euros or dollars. Inflation is a tailwind rather than a headwind. And people aren't interested because the baby got thrown out of the bathwater. So like we have a Coke bottler in Turkey. We've got a company that imports all the VW brands and controls most of those dealerships in Turkey. These are really good businesses. And the gamblers will give it to you at great prices. So that's where I think I should put more time and energy.
Mohnish, the foreign ownership you just mentioned, why doesn't that trade?
I'm just saying institutional investors are not going in and out they did go out, I think in 2018, 2019, 2017, there was a mass exodus, right? So there were Templeton funds sold me Resas at 2.5% of liquidation. I don't know what John Templeton thinks of that in his grave. Okay. But they're supposed to have the framework. But some guy in New York says exit, and then they exit Turkey. So that sort of thing happens. And so, yeah, I think that the institutions in a place like Turkey, I think they have a somewhat longer horizon, but I think they also get spooked out. I think at this point, everyone and their brother has left. So, but the thing is that the stock market's kind of like a theater, right? Every seat has to be occupied. And so every share has to be held by someone. So if you are exiting, it's like a burning theater. You have to find somebody who will take your ticket and go back in and sit in the theater. And if the theater's on fire, that ticket is not going for $100. You paid to get that seat. You'll take 10 cents.
And you're enjoying the movie. So that's good.
I think that I got to make sure I'm in the part of the theater which is not going to get affected. The theater is on fire, but there's a balcony where it's not going to get there or something.
So I quite love the analogy for companies that are sold down by a large extent as cinemas being lit up on fire. Except every seat has to be filled in this burning cinema. So I guess Mohnish has already given up his seat in this room where we are currently screening a Chinese movie. Some might even call it a Chinese horror movie. Maybe, just maybe, this particular cinema is situated in an area where an earthquake is about to hit us. Something the cinema operator has no control over. It also seemed like there is a negative connotation behind the term the CCP, which is the China Communist Party. So whenever people talk about the CCP, it's always about regulations and power struggles. So I think many investors tend to forget that they are still currently managing the second largest economy of the world with expectations from 1.4 billion people. So what about the upside from policy easing and maybe even a potential economic stimulus? Are we forgetting something? At least for now, it does seem like many investors have already thrown in the towel and decided to abandon this Chinese ship in totality. So I haven't been calling for the bottom for Chinese tech, but given the rate at which I see investors capitulating, I really think that we are already in the process of bottoming out. So what do you think? With that, I will see you in the next video, but more importantly, I will see you on the moon. Goodbye!